Welcome to Stock Talk with Nico Kritikos. Today we're going to do some stock analysis for Meta Platforms to ETA. This stock I've owned for almost 5 years now. I got 16 shares, and this stock is up 200% on the year, and it's up 147% in the last 5 years. So in the most recent earnings report, we have their revenue up 23% to $27 billion for the quarter. Or I'm sorry, last year was 27 billion. This year is 34 billion. Their costs and expenses were down 7%. So this led to a huge increase in income, up 143% year over year, which luckily I think investors liked that they were cutting out the cost with the metaverse. And so that's why we see all these metrics up so much, net income and EPS. Then we're going to look at real quickly, we're going to look at dataroma.com because this is going to tell us that Meta in this last quarter, in the last couple of quarters, was actually one of the most purchased stocks by super investors. And we have, let's go back here. We can see that Meta is, so here's the last, we have 11 different super investors buying Meta platforms, okay? So if we look at the first thing on my checklist, we're going to look at revenue. It's up 23% year over year with $116 billion for trailing 12 months. Net income is up 8% with $23 billion of net income. If we want to look at those charts, we can see that revenue has been fairly consistent besides for the last 2 years. But in the last 10 years, we're averaging 36% revenue growth for net income. It's not as consistent, but it's not bad. They're averaging about 7 to 8% of net income growth. So hopefully they can do better with that. And then we look at the price to earnings. We're looking at this stock trading at 26 times earnings for this year's projected EPS. Now, right off the bat, that looks like it may be expensive, but it's actually not because their EPS is growing so much. So if we look at where the stock normally trades, it's normally around, I would say about a 27, 28, 29 is probably about the average. So 26 is not horrible. But when you compare it to what they're going to be doing for EPS over the next 1 to 2 years, in 2025, they're supposed to, or 2024, they're expected to do about $16 of EPS. So that's going to bring that PE ratio down even more. That's why I'm not interested in selling this stock anytime soon. Are they innovative? Yes, pretty much with everything that they're doing. Facebook, WhatsApp, Messenger, Instagram, Oculus, all the stuff they're involved with, I would say they're doing it in an innovative way. Market share, yes, definitely strong. Return on invested capital is 22%. At least the average for their return on capital is about 22%. But last year they only did about 18%. But still, all the numbers are normally strong. The equity we're looking at, by the way, this company has one of the best balance sheets you can find, but the equity is $142 billion and it's constantly growing. The equity is 16% of the market cap, so that works for me. That'll get a check. The share count is decreasing by about 2% per year. And then this is one of the best metrics. If we look at their balance sheet, you can see the ratio of assets to liabilities is nearly 3x. So let's go to the most recent quarter. We're looking at over $200 billion of assets and only $70 billion of liabilities. So that's pretty much as good as it gets. Not many, because most companies don't even have a 2-to-1 ratio. This company has about a 3-to-1 ratio. So they definitely get a check for that. Then we're going to go to profit margin. We're looking at about a 25% average. That's strong. And actually, let's look at, yeah, so the margin for the last quarter was 40%. Right? So they're even, a lot of these numbers are improving. Then let's go back and we're going to look at cash receivables of 83 billion is more than their net income. That'll get a check. This company does not pay a dividend, but I'm not really expecting it to, so that's okay. It's about 20 years old. And then their free cash flow chart is, honestly, it could be better. Let's go back up here. The free cash flow is, it's almost, this past year is almost what they were doing 6 years ago. So this definitely could be better. But I wouldn't say it's bad. I would just say it could be better. So all in all, I would say I'm bullish on Meta stock. I would not sell this. At least I would start selling this company if it hit maybe at least $400 a share, but honestly, I think it can go to $500 a share at some point in about a year from now. So long term, I'm bullish on Meta Platforms.